Well, hi everyone, Ben Odell here from Mortgage Advice Bureau of the Hills. Hope you're having a great afternoon. Just wanted to hop on quickly to talk a little bit about some of the interesting discussions that have been happening in the papers today around home lending policy in Australia. Specifically, some politicians' appetite to work closely with the financial regulators to improve those policies and in turn improve housing affordability. Well, what are the policies they're looking at? They're looking at HEX policy, number one. Secondly, they're looking at the 3% buffer. And thirdly, the rate of interest you pay if you borrow more than 80% of the value of the property. How is that going to help? Well, if you have a HEX debt or a student loan, at the moment you can borrow less because of that short-term debt. But they're looking at ways to improve that so you can borrow more and get the property you want in the housing market today. Secondly, they're looking at 3% buffer. Well, why does that exist? That exists to make sure that when banks assess your affordability, they assess it at the current rate plus 3% just in case rates go up. So it is a good policy. But the thing is, it used to be 2%, it was then 2.5%, and then it went to 3%. So the argument is, if rates are at their peak and potentially going to be dropping, do we need the buffer still at 3%? Potentially not. That's going to help a lot of people borrow more money. It's going to help first home buyers, it's going to help upgraders, it's going to help property investors, it's also going to help what they call mortgage prisoners who borrowed money when rates were low and actually can't refinance. So it's going to be really helpful, but it needs to be a careful discussion. I completely understand that. Thirdly, they're looking at the rate of interest you pay if you borrow more than 80% of the value of the home. At the moment, if you borrow over 80%, you're paying mortgage insurance plus a higher rate of interest than someone who's borrowing less than 80%. Is that fair? Some people are suggesting no, but they have to work with the regulators to change the regulators' policy to help the banks pass on lower rates. So some really good initiatives, some great ideas, great to see the discussions being taken seriously and more people get involved in the discussion. We hope to see some of those policies progress, especially while we're in an election cycle. If any of this discussion stimulated any thought for you, and if you think there might be an impact to you, hopefully positive, feel free to reach out to me if you think I can help. I'd love to be able to sit down with you and talk about your specific situation and how I might be able to assist you. Have a great day.